Thank you, everyone. Uh, I'll request Gaurang, my deputy conveyor, to do the introduction of our speaker of the day. Gaurang, over to you.
Good morning to all the members. It is my great pleasure to introduce today's speaker, Mr. C.A. Piyush Chajed. CA Piyush Chajed has an experience of 20 years specializing in the fields of specialization in tax, litigations, and advisory. He has been senior partner. He is a partner at Chajed Doshi since 2000, since April 2000. The firm established by past president S.P. Chajed. Piyush Bhai's specialization is into direct tax and indirect tax, appellate proceedings, and arbitration proceedings. He has been speaker at various direct tax topics. He was also a member of external advisory committee. He is the member of external advisory committee of RBI for Asset Reconstruction Company. He was a co-opted member for Central Council Committee of Strategy, Prospective Planning and Monitoring Committee of ICI 2019-20, member of study group formed for the revision of publication on guidance note on tax audit under Section 44 AB of the Income Tax Act. Special invitee at Central Council Committee of Direct Tax 2018-19. Co-opted member of Central Council Committee on Government Accounting of ICI in 2009-10, and co-opted Central Council Committee, member of Central Council Committee for Board of Studies in 2004 and 5. At WRC, he is also co-opted member at Direct Tax Committee for 2021. He is a sub-group member of General Committee of WRC for 2007-8, career counseling for 2008-9. He is also a Direct Tax Committee. He is a member of Direct Tax Committee of Chamber of Tax Consultant for 2019-20. He has been contributed to WRC publication on Vivad Vishwas scheme 2020 and also review of frequently asked questions on charitable trust published by Jain Chartered Accountant Federation. With this,
let's welcome Piyush Bhai with a big round of applause. And I'll request Piyush Bhai to take over from here.
Thank you very much, Devang. I'm audible clearly. I think so. There was some message where voice was not proper of Gaurang, but now it's fine.
It's fine, sir. Yeah.
Okay. Thank you very much. Convener of the study circle, Devang, Deputy Convener Gaurang Shah, all the esteemed members of Andheri West Study Circle. I welcome you. Good morning on this Saturday morning, 5th of December. We are just 3 weeks short of Vivad Vishwas scheme, wherein we'll have to file a declaration, at least, even if we are not paying tax. So Devan just mentioned that we had planned this seminar in month of March, and I'm happy that you could not do this in month of March because there was only a bill at that moment of time, and even Act was not there. Act also came in last week of March when it was passed, and second last week of March. But there are so many FAQs which have come, and to my surprise, yesterday late evening there is another FAQ which has come, clarifying a lot of issues. Definitely the clarification is quite good. A lot of contentious issue whether you are eligible or not on the calculation aspects. A lot of things have been clarified in this FAQs. So now it's a right time when this seminar has been held according to me, because I do not expect any more extension now coming forth in this matter. The aim of the government was to collect a good amount of revenue for the fiscal year 1920 itself. But due to the lockdown, I believe now their target is that financial year 2021, where the government is fighting with their revenues, this scheme could help them a lot in garnering the revenue. And as I always feel, the settlement schemes, Vivad se Vishwas schemes, all such schemes are very nice, even from the perspective of the businessmen, from the assessor's point of view. Because it is always said that generally a businessman should not litigate. He should litigate only when the push comes to the shove, when you don't have any other way out. It's always better not to litigate, because the cost of litigations, time involved, all those things can be put on much better job which they have in hand, which is their businesses. And therefore, it is always advisable. Whenever you have a good schemes, like Vivad and Vishwas scheme, where you are getting quite a good benefits, waivers, you should always opt for it. And with this thing in the mind, and the mind which government also knows, and seeing the success of service tax scheme, which was Sabka Vishwasam scheme came up in the service tax also, that was quite successful. So the government thought that this scheme should be also a successful. And the way the figures are being reported or are being declared by the finance ministry and the CBDT, I believe that already a lot of declaration has been filed in this case. A lot of revenues have been collected. Now, of course, some figures are reported in media. Now, those are actually the figures have been collected, or it's an amount of settlement in which the collection may be less, but the amounts which were deposited as a part payment would have been adjusted against those settlement amounts, and therefore it would be treated as a collections. So in any case, the scheme seems to be good, and it's a right time they want, according to me. And now I'll just, in my brief presentation, as you know, because the scheme is basically applies to all the disputed appeals, disputed matters as on 31st January 20. So it's a very limited to the matters to the assessees where some litigations are ongoing. So it technically does not apply to 90% of assessees who do not have a litigations. It may not apply to a certain practicing chartered accountants, individuals who are not involved into a litigations or who do not have much litigations practice. But at the same time, it also becomes important from the professional point of view, because the numbers of litigations remains quite high. When I just start my presentation, I'll take you through my slides also. And of course, Andheri West Study Circle is very dear to me. I've been also the member of this Andheri West Study Circle, and I've been attended 2 or 3 the annual functions also. And I've also delivered lecture at local self-government. And it's one of the, I feel a very nice, that it is the only study circle which actually achieves the objective of a study circle. Study circle were actually formed to have a closed group and not have a session of like a conference or seminar where you have a people more than 200, wherein individual people cannot discuss their issues, cannot sort out their problems. The objective of study circle, as I know when came in somewhere before 2000, objective was that small group of chartered accountants should come together. Whatever problems they face in their day-to-day practice by serving to their clients, they can come to their professional burdens, which are of a small group, say 30, 40, 50, not exceeding that. And they can resolve those problems in their daily practice by taking in help of the professional. That was the objective of the study circle, really speaking. But as we know now, the study circle sizes have gone. It's some study circles have become like a branches, and wherein only one-way communication happens in the seminar, and there's no two-way communications. So in a small study group, I believe that the two-way communication is must, and the study circle should continue with the two-way communications. Obviously, in a virtual mode, you have a very limited, because you cannot have a two-way communications because it may lead to a lot of disturbances. So today we might be having a one-way communications, but as told by convener, that will have 15 or 20 minutes in last whenever I'm able to complete my presentation. So we'll keep 10-15 minutes where we can have a two-way communications and try to sort out whatever queries members would have. Or if any queries have been received by emails also, we can try to sort it out. With this, I'll just start with my presentations and I'll just take it through you. So if anything, if there is any disturbances in my voice or relay, Devang, you can just ping me, so I'll try to improve that during the lecture. Devang, it's audible, and you can view the screen.
Yes, we can view the screen as well.
Thank you, thank you. So Vivad se Vishwas scheme. So the name is very nice. It says, of course, if you read the act, it says direct tax Vivad se Vishwas scheme, because it only covers direct tax. It does not cover any acts which were also promulgated by CBDT, like there were wealth tax, there were fringe benefit tax. There may be some small litigations going on somewhere, but those are not covered. It's purely a direct tax Vivad se Vishwas scheme. So, of course, as the name sounds, the objective of this, that wherever there is a vivad between an assessee and the department. So vivad means there is a contrary views. Department says a particular assessment should be made in a particular manner, a particular income should be taxed in a particular manner, a particular expenditure is not allowable. So there is a difference of view, whereas the assessee's view remains, no, I have rightly claimed the expenditure. I have rightly offered income for taxation. This is my position under the law. So there is a vivad. So there is a controversy between two of us, between a department at the one place and the assessee at the other place. So what does this scheme actually wants? This scheme wants to convert this vivad into a Vishwas. Vishwas in the sense, we both come together and try to resolve this and try to create a Vishwas between us, that whatever I'm saying is correct or whatever you're saying is correct, irrespective of that. Let's settle in this. Let's pay the tax on it and get a waiver, whatever government is ready to give. So it's a nice name also given, because you are moving from a vivad to a Vishwas between a taxpayer and the tax department, which is very important in today's time. If you see the last amendments which are happening in the tax laws, it has been continuously seen that a lot of schemes, a lot of assessment procedures are changing just to create a Vishwas between a taxpayer and the tax department. It is always necessary that there should be a Vishwas, there should be a trust. A tax department should trust a taxpayer. That's most important criteria for any tax law to be successful. A trust can make a tax revenues buoyancy. If there is no trust between a tax department and taxpayer, in my view, there can be never a tax buoyancy which can be expected in such a scenario. So there has to be a trust. And when you are coming with such a scheme, when you are coming with such a policies, I'm sure government is on the forefront to create more Vishwas, more trust between the taxpayer and tax department. And of course, the role also remains from the assessee sides, that they also do not lose trust of the tax department if they are trusting on it. So this scheme would be a right step at the right moment of time. Number one, because you are reassuring that there would be a Vishwas between the tax department and taxpayer, number one. Number two, the government is in need of revenue. Everybody knows, even up to March 20, they were needing revenue. After COVID, the current scenario, the revenues for the government is important. There are a lot of other matters which have to be taken care, which cannot be taken care without the monies coming in. So it is important. It is also important from the perspective of the assessee, I would say, because assessee can concentrate on the business. The time when the businesses are down, the only efforts, the time of the businessman, in my view, at this time should be purely concentrated on the business, how to regain on the business front, rather than disputing, rather than going to courts, going to tribunals, attending the offices of government department. If you are able to shell certain amounts by paying tax and resolving the dispute, not accepting it that you are wrong. Nowhere the scheme says that you are conceding to it. By accepting by making a declaration under the VSV, the government is very clear that you are not considering any of that tax position. It does not stop you for a particular year. If you have taken a particular stance and you have opted for VSV, it does not stop you to take a similar stance and still dispute in the next years. So it does not. It is only a matter of time, which says that the time which you are putting on this litigation and the amounts which you would be spending on the litigations, if it can come to a government kitty and the matters can be resolved, this time from both the sides can be put to much more better use. That's what the scheme, according to me, is the objective. What the scheme is, when did the scheme came? If you see the historical, the Finance Minister of India announced a scheme during the budget session of the Parliament. And when it was announced, the scheme was opened up till 31st March. You have to file the declaration and pay the tax. If you pay a certain tax, you have to pay X amount. But if you were not able to pay tax up till 31st March, there was some time limit given up till 30th June that you may have to pay another 10% additional. The same was passed by Parliament and it became an act and came into force in somewhere in March 20. So as I said, the original plan of the scheme was to garner the revenue for 31st March 20 itself. But unfortunately, due to the worldwide pandemic, this plan could not be achieved. Anyways, the plan remains the same. The objectives of this particular scheme are still achievable, and I'm sure they will achieve it. What is the purpose of the scheme? If you see, the main purpose was after there was a scheme which under the indirect tax, not only service tax, which I mentioned initially, all the indirect taxes were covered under that particular act, like I'm sure excise, customs. But it was called indirect tax Sabka Vishwas scheme or something like that. One second. Yeah. Indirect tax Sabka Vishwas scheme. This act aims to reduce 4.83 lakh income tax litigation spending before various authorities. When I'm talking about various authorities, that means all the appeals which are pending at either commissioner level, at tribunal level, at high court level, at Supreme Court level. And actually the reduction in the litigations would be by 4.83 lakhs. That's what is expected. So the litigations are much more. But the government's estimate is that at least 4.83 lakh appeals will be resolved. By this resolution, the time, energy, and resources of both the parties, that is both government and the taxpayer, will be saved. That's the main purpose of this scheme. What's the current status? As I said, I've also read this in media. I don't know how many the figures are correct. After the government has extended the due date up to 31st December 2020 for filing the declarations, and you can also pay the tax up to 31st March 20 at the same tax rate. There's no additional tax payment, original 100% of tax dues. The status which was declared by the government on 17 November 2020, which I got it from the media, it says that they have already garnered rupees 72,480 crores through this scheme. It's phenomenal according to me, if that is true. Now, I don't know when they say supposedly garnered rupees 72,480 crores. Does it mean actual cash collections under direct tax Vishwas scheme? Or they mean to say the amounts or the value of their declarations or the values of disputed tax? So we are not aware, because the disputed tax may be 72,480 crores, but the certain collections like 20%, 30% or 40% thereof, which would have been already part paid. In certain cases, we have seen that 100% of the demand has been paid, but still the assessor litigates the matter before the appellate authority. So in those cases, they are not getting the cash collections. The revenues or the part payments, as you all know, the government accounts on the cash basis. So whatever part payments have been made or whatever has been deposited before 31st March 20 has been already been accounted as the revenue of the government in that particular fiscal year. So I'm sure the 72,480 crores is cash collection, or it's only a value of declaration, that the cash collection would be maybe less also. So I don't know. But nevertheless, the value of the disputed tax, even if it is 72,480 crores, ignoring the cash collections, I am very happy, according to which seems to be quite successful, the scheme, the way it looks as on 17 November. And I'm sure that December will be the peak wherein most of the declarations will be filed. So once the declaration is filed, the government will know what is the value of the settlement. The cash collection, they will only come to know up till 31st March 21. Obviously, all the assessors would take the benefit available up to 31st March 21 for paying the taxes without any additional burden. Then they have declared that there are total 45,855 declarations. So I presume that 45,855 appeals have been, in case of disputed appeals, the declarations have been filed. The expectation is 4.73 lakhs. So roughly they have already reached to 10% of declarations as expected by the government. Nevertheless, it's good because it has been always seen that in all the direct tax filings, whether it is an income tax returns, 70 to 80% of tax returns are filed in the last month. So obviously the declarations will be coming in the last month. So December is peak, 25 days are the peak. I'm sure for us, like a professionals, this would be a tough time because we have to also file our audit reports before 31st December. There are certain GST audits also pending, and which are the due date is 31st December. If anybody wants to opt for VSV scheme, you have to do a working and file a declaration. So December is quite a good busy season for a chartered accountant. Then there is another statement which says that the central public sector companies are also willing to settle their disputes totaling to rupees 1 lakh crore. So the figures, of course, as you know, central public sector companies are again under the control of the government of India, obviously. And if there is a dispute between public sector companies and department, and the matters are being litigated for years, I don't know why it's happening. But unfortunately, there was a committee of COD, only for the benefit of audience. I will tell you what happened, what used to happen. Before 7 to 8 to 10 years, I would say, if any public sector companies which are owned by the government or where the majority of stake was with the government, if they wanted to file an appeal against the income tax department, they had to put a proposal to committee of disputes. And the committee of disputes, that is we call COD approval. After the COD approval, only appeal could have been filed. This was because that the aim or the objective behind the COD was that government, one hand of the government should not fight with other hand of government and waste the resources in paying the advocates, counsels on the both the sides. So there was a COD. But after that, because certain public sector companies started becoming autonomous, a lot of disinvestment was happening. So there were hardly any 100% public sector, because most of public sector companies, bigger companies who have a good tax demands, have become listed entities. And so there are public involved. Now it's not purely 100% government owned. So the COD was removed, stating that they should be treated at par with any private sector companies, because the other stakeholders are also important. If they want to fight the dispute, they should do it. But at this moment, I believe, I'm sure that the government has made this statement. A lot of public sector companies would be forthcoming and would be settling the disputes, which will help the government to meet the target. Coming to the provisions of the law, to whom this it is applicable, Vivad scheme, who can apply for Vivad scheme, who can file a declarations? The person, the assessee, who has any pending appeals before CID appeal, ITAT, High Court, and Supreme Court. So if your appeals are pending before any of this authority, as on 31st January 2020, you can file this appeals. What are the issues of appeal? Disputed, if it is in relation to disputed tax, fees like 234E, there is a late filing fees, those are covered, TDS, TDCS, disputed interest, penalties, etc. And then there are a lot of clarifications have come, wherein a lot of other disputes have been also tried to be roped in to make this scheme holistic, wherein most of disputes are covered. Leaving apart certain, like initially, if you remember, the search cases were not covered, but ultimately the government's interest is in settling whatever they can settle, to whatever extent they can settle, wherever there is even a hope of a small revenue coming in. And that's why a lot of clarifications have come. Search matters have also been covered, except in the cases where the search demand is more than 5 crores. What are the eligibility? So there are, first is applicability, who can apply for their declarations and who are eligible. So even if your appeals are filed on or before 31st January 20, or order for which time for filing appeal has not expired on 31st January 20. So if you take in case of assessment year 17-18, whose assessment I believe happened somewhere in 31st December, and you had to file an appeal before Commission of Income Tax Appeals within 30 days. So your time, if you would have received an order before 31st December 2019, your time was expiring on 30th January 2020. So you should have technically filed an appeal. So once you file an appeal, your appeal becomes pending as on 31st January 20. But if you do not file an appeal, then you are not eligible because your period for filing an appeal has expired. But if your order is dated 31st December 2019 and the order was received by you on 5th January 2020, the 30 days ends on 5th February 20. So your appeal is technically, the period for filing an appeal has not expired on 31st January 2020. So you are eligible for it, irrespective whether you have actually filed an appeal on 5th Feb or not. That's the best thing. So even if you are not filing an appeal, there was some assessment made, you have already paid the taxes. And if you are now able to look at those cases where the orders were received after 31st January 2020 and the time limit for filing an appeal has not expired as on 31st January, it's after 1st of February, I would say, then you can still file an appeal against those additions. And you can at least get a benefit of interest, though you are accepting the additions. Then there is if there is a matter pending before dispute resolution panel. So the cases which are pending as on 31st January 2020, cases where direction has been issued but no order has been passed. So what happens in DRP? DRP generally involves when there is a transfer pricing dispute between you and the transfer pricing officer, and the SSA requests that the matter be sent to a DRP panel. So the DRP looks into the documents and determine the arm's length price, and then issues a direction to your assessing officer. TPO does that. DRP does that. So what the DRP does is, after that direction, and the assessing officer has to pass an order. So whatever cases are pending before DRP, number one, and wherever the directions have been issued, but the assessing officer has not passed an order pursuant to those directions, all those will be treated as pending as on 31st January 2020, and you shall be eligible for filing the declaration under PSV. Revision filed under 264, where you have filed a revision on or before 31st January 2020, and it's pending as on 31st January 2020. Application under section 264. Just for your recollection, 264 is an application to be made by an assessee, where assessee seeks to revise some returns. Let's take an example wherein you file an income tax return, and certain claims, certain benefits, certain exemptions were not claimed in that particular return, and you realize later on, but the time period for filing the revised return has been expired, or because you had filed a belated return, you are not able to file a revised return. You have a chance where you can make an application for revision under section 264. So those cases are covered. Similarly, if there is a 263 CO motor revision done by the commissioner of the assessment order passed, and those proceedings are pending, or you have filed an appeal against the 263 order, directions giving an order where the quantum can be determined, those cases will also be covered under the ESG. Search cases, as I mentioned initially, they were not covered, but after the amendment in the Act, they have been covered only in those years where the disputed demand is less than 5 crores for each financial year. So for each financial year, the 5 crores is quite a good limit. So because generally a search would, the search assessment takes place for 6 to 7 years. In cases of the search, your 6 years cases from the date of the search, 6 years prior to that financial year, all the cases can be opened up. Whether the assessments have been done or not, or the assessments are pending. So all those either abate or do not abate. But as far as the search cases are concerned, search records are concerned, additions could have been made. So there may be a scenario where in 5 years or 6 years, assessment have been made under the search cases, that is section 153A, or even under the erstwhile block assessment, that is 158, wherein the 10 years block was been considered and one assessment order was been passed. If the disputed demand for each financial year in respect of those search cases is less than 5 crores, you can opt for it. So let's take an example. If you have a 6 years open, and in the 3 years, your disputed demand is more than 5 crores, whereas in the another 3 years, your disputed demand is less than 5 crores, then you are only eligible to apply for DSV in respect of those 3 years where demand is less than 5 crores. And you can do that. You need not settle all the 6 years. Because of the 3 years you are not eligible, you can ignore that, but still that does not prevent you from making an application for the other 3 years where your demand is less than 5 crores. So it's basically per year, per financial year, per assessment year, whatever you say. For each assessment year, you can take a decision whether you are eligible and whether you want to file. Even if you are eligible, you don't want to file, you can go ahead and dispute it. If you are eligible, because it's less than 5 crores for a particular assessment year, you can file it and move ahead. What are the immunities to assessing? The most important point. When I'm coming forward, I try to create a Vishwas between a taxpayer and the tax department. Obviously, anybody is concerned that what would be immunities available to me. The law provides for certain immunities. The order passed by which are as under. The order passed by designated authority shall be conclusive for the matter in dispute, and same cannot be reopened in any other proceedings. So once the assessment is intimating assessment order, you have filed an appeal and it is settled, an order is passed by the designated authority accepting the declaration and taxes have been paid as intimated to you, the matter gets over. It can never be reopened for that particular year. No institution of any proceedings in respect of any offense, penalty or interest. So there won't be any penalties or any prosecutions or interest would be levied on such offense. Because as I said, the most important point is when you are filing a declaration, it is never treated as if you have conceded to particular issues. Your dispute remains. You are not accepting it. It's only just that you just want to settle it. You don't want to litigate any particular further. appellate forums, arbitrator, conciliator, or mediator, not to decide the issue in respect of cases when an order is passed. So there are a lot of appeals are pending. All those appeals will get withdrawn. There may be a tax disputes which is in arbitration. As you know, and now the arbitration is a new word, but in international tax arbitration in case of Vodafone has been going on. So those all will automatically get settled and they can never be again opened. So that's what the immunities we are getting it from this. Other important points which I thought I should point it out. The amount paid pursuant to declaration is not refundable. Amount paid pursuant to declaration. Let's take an example. You file a declaration on 31st December. After filing a declaration, the amount is calculated and intimated to you in a forms to you. You make the payment and the matter gets settled and the final closure certificate is being issued by the designated authority. At any point of time, you cannot claim that refund. The matter is over. That's the amount paid pursuant to declaration. But let's take an example. Once after filing a declaration, if you are making any payment, amount is not refundable. But if you make a payment today, as a normal, you are making your appeals are still pending today. You make a part payment. You make an 100% because you know you want to go to a VSV scheme. So I have already deposited 20% pending appeal during the March month because of the pressures. I decided I need to go for a VSV, but after paying, after pursuant to declaration, if I pay and tomorrow if it is not, I just want to not accept it, I cannot claim refund after the certificate is received. So you don't have a chance available. You can deposit 80% today also, make a 100% payment, then file a declaration stating that now nothing is payable, which will be accepted. In which case, if there is some modification done to my declaration, let's take an example, he does not accept my payments and he does some modification to my declaration. He makes makes some changes in the calculation and I don't want to accept it. I can still claim a refund of such amounts. So that's the most important. CBT may issue directions or orders to income tax authorities as it may deem fit matters of collection procedure to be followed as necessary in the public interest, remove difficulty. So this power has been given to CBDT, and under this power only we have been seeing a lot of FAQs coming in. One has been last night it has been received. No such orders to be made after the expiry period of 2 years from the date on which the provisions of this bill comes in force. So these are the important points which needs to be kept in mind. Coming to payments, most importantly, what needs to be paid, how it needs to be paid. There are two slabs. It's a very simple, everybody knows today, but just for the sake of repetition, I would like to just have this. So if there is an appeal pending and there is a disputed tax involved, what do we mean by a disputed tax? A disputed tax is tax payable on the disputed additions. So if there is a disputed additions and let's take there is an 100 rupees addition has been made and the 100 rupees addition you are disputing in an appeal, then the disputed tax will be calculated on this 100 rupees. So if it's a 30%, then there would be a 30% plus surcharge plus education plus whatever it is. So there would be a disputed tax would be 30 rupees. So that 30 rupees is you have to pay. Then there would be full waiver of penalty and interest if you pay up to 31st December 12th. After 31st December 12th, there was an additional tax to be paid, which was an 110%, 10% additional. But on 28th October, this bill notification issued, which says that now you need not deposit any additional tax. So the tax payable remains 100% in case of all dispute tax, except non-search cases where the assessment or subject matter of addition is because of the search. You have to pay only 100% of disputed tax, nothing more. All penalties, full penalties and interest would be paid. I'll go to full penalty and interest. So penalty, when it implies on the penalty. Penalty means penalty which are in relation to disputed tax. This is an unfortunate clarifications given yesterday evening. I was under impression. Let's take an example. There's an addition of loan addition, section 68, or there is an addition of a cash deposit. Along with those cash deposits or a cash loan addition, you have taken a cash loan in violation of the limits prescribed under 269 SS 269T also. Let's take an example. So there was a tax amount also because there is an addition made under section 68. And also there is a penalty initiated under 271D or 271E of the Act. So I was under impression up till yesterday evening. and we were also promulgating that if you are making a tax payment and you are settling the quantum tax appeals, all the penalties in relation to that will be completed. Now, unfortunately, there's a clarification given that the penalty which are not in relation to an assessment will not be settled. Only penalty which results out of the assessment. Now, the examples in the FAQs have been given is only 271A, 271B, 271AA, which are in relation to tax audit penalty 1,50,000, penalty for non-filing of particular returns. They have not mentioned about this penalties for violation of 269 SST, but they have mentioned etc. So I believe because there are judgments which says that the penalties of in nature of 269 SST, they are not culminating out of the assessment. They are the independent penalty. They are not penalty because of the quantum addition. And therefore, as per the FAQ, if we read today, those penalties cannot be settled. In fact, I am aware wherein we ourselves have already made an application. Of course, we have not yet received an approval or a declaration in Form 3 from them accepting it, where we have already made settling the quantum appeals and asking for a penalty waiver on 271D also, 271E also, that is 269SS and 269T penalties, which are levied under 271D and 271E. So there is a FAQ which has been issued yesterday, and I was surprised to find that. Otherwise, according to me, if I interpret the law, the way the act is, all the penalties in relation to that particular assessment should have been, or in particular related issue should have been settled. But because now the FAQ says, according to me, it would not be accepted by the department. And if any course available to you, if you still want to actually avail the benefit under this particular scheme, only course available to you is to file a writ and let them interpret the act rather than what is written in the FAQ. So this is how it is. So disputed tax, coming back to it, you have to pay 100% of disputed tax. Penalty and interest is with nothing to be paid up to 31st March 20. Now, question that arises to my mind is, in the Act, that is the Direct Tax Vivad Vishwas Act 2015, there is a definition of a last date which will be notified. What do you mean by the last date? If you read the Act, it says any tax paid before the 31st March 20, I would interpret today 31st March, it should be 21. It says December 20. There's a typographical error in my presentation. Please bear with me. It should be read as after 31st December 2020 up to 31st March 21. It should be read. So 21 is 100% of it. What happens after 31st March 21? Let's take an example. I have filed a declaration and I am not able to pay the tax up till 31st March 2020 somehow. Can I still pay additional tax because last date has not been notified? So can I pay 110% instead of 100% of disputed tax after 31st March 2020? Let's say after 1st April 2020. To my mind, you can pay it because that is last date has not been notified. The last date has to be notified. Let's take an example. They notify last date as 30th April 20. Then I get a 1 month, 30th April 21. So I get another 1 month wherein I can pay those additional 110% tax. That is additional 10% tax, taking it to 110%. So according to me, there is no clarification in that. But the way the Act stands today also, according to me, you can still pay. My view is also fortified by there is some FAQ issue SKD 9, which was in relation to a TDS paid by a defaulter of TDS. So the question arose that if the defaulter of the TDS pays the TDS and the VSV scheme, whether the TDS, the amount that is deductor gets a benefit, whether deductee will get a tax credit or not. So there is a clarification that deductee will get a tax credit. So if a TDS defaulter pays today under the VSV scheme, please note deductee is getting a tax credit today in his normal course. In his assessment, he can claim it by filing a rectification application for whichever assessment year it pertains to. He can claim it. Now the question arose, and there is an FAQ, it says that if anybody pays a higher tax because he is not paying tax, TDS higher, not at 100%, but says 110%, because he is not paying tax before 31st March 21, then whether deductee will get credit of 110% or $100. So the clarification issued is that he will get $100, which means that by this FAQ, what I'm trying to make a point, that government is envisaging that they will still collect 110%, then there will be cases which will be, in which case tax may be paid after 31st March 21, wherein additional tax could be collected. So they have kept that window open, and therefore I believe last date has not yet been notified. So it may come. But there is one more catch to it. It says that once you make a declaration and you receive a certificate of the tax payment, what is the amount of tax to be paid in Form 3 according to me, then you have to make the payment within 15 days. Now this 15 days was relaxed by a particular circular stating that you can make the payment up to 31st March 21. So this 15 days is relaxed up to 31st March 21. But what happens after 31st March 21? So if you have filed a declaration and you have received a certificate up to March 21 also, then within that 15 days, according to me, you have to pay. So if those 15 days fall within 1st April 21 to 15 April 21, you will have to pay additional tax. Thereafter, you lose that opportunity. But if you don't receive any declaration only, which is the case in Mumbai, where in last 6 months, I think so, no calculations or anything has been received from the department in most of cases. So if you don't receive, what happens? You just wait it, and still you will have to pay a higher tax. That's the condition. That's the situation. Now, this 100% has to be rated as 125% if the matter is in relation to such cases. If there is dispute only on penalty, interest, or fee, that is quantum, there is no dispute on quantum. You have to pay only 25% of the disputed amount. So if the penalty is 100 rupees, that is only a dispute on interest. Interest, what I can think is the wrong interest has been levied at 234 ABC, and you have filed an appeal. Or there is a wrong interest under section 143(1) was calculated, and 143(1) was issued somewhere, and it's pending. That 143(1) order is pending as on 31st, and it falls within that limit. You can settle those interests with 25% payment, basically. So you file 25% of that. Penalty can be 25%, and fees like 234E, and there are certain fees for late filing of KDS returns, late filing of, those will be also fall under 25% category. Again, all this can be extended by additional 10%, subject to clarification to come, which I believe will come when the last date is notified or closer to 31st March 2021. Disputed tax non-surge cases, where appeal is now, this is where the appeal is filed by the taxpayer, where I am disputing the particular tax additions. Now, that may be a situation where department has lost, but they have gone into higher forum. So CIT appeal has allowed the appeal in my favor, but the department has gone into a trial. So you have an option over there. Of course, you have succeeded. As of today, you don't have any demand on you. Demand as per after giving an order giving effect to a CIT order, technically your demand should be nil. It's nothing payable. And if you have a good case, you can still contest the department appeal and oppose it. And you may succeed also. But the question is, if a assessee feels that department has gone in an appeal, and the situation may reverse tomorrow because of the peculiar addition which is, and there is no comfort level at that particular, you can apply for a BSP scheme in case of those appeals also, but department has filed. And there is certain benefit given to you that whichever additions which are being disputed by department in an appeal, you only have to pay 50% of disputed tax on that. So if I get a relief of 100 rupees, disputed income relief of 100, when the disputed income 100 rupees, and because the department lost it, department has gone and appeal in a higher forum, and I don't want to contest those appeals or keep those matter open pending. Tomorrow it may move anyways. I may still file a BSC stating that it's a departmental appeal. Once you say it's a departmental appeal, on this 100 rupees, a disputed tax comes to 30 rupees, you will have to deposit only 50% tax. If this disputed department appeal is in relation to such cases, it becomes 50% of 125%, which is ultimately 62.5%. And similarly, if the department appeal is in relation to penalty, interest, or fees, it will be 50% of the regular tax. So, in case of department appeal, in short, you have to pay 50% of 100, 125, or 25, which comes to 50, 62.5%, 12.5%. Again, in this case also, there is no clarification on additional payment. If you have to make an additional payment, this 50 can become 55, 12.5 can become another 13.75, I believe, if 10% increases or something, after 31st March 21. I've just jotted down certain examples for the benefit of course, it's very simple and I'll just slide through faster, but because this presentation may be useful to the members on the later stage also. And obviously, most of these examples I've also tried to cover. I mean, when I was contributing to VSV book, I tried to cover those examples into those books also. Now, this is a very simple example of how much tax has to be paid in this example, where you are filing income as per return income is 70 rupees and assessed income is 70. Add disallowances, there is a 10 rupees and under report itself 50. So there is a total addition of 60 rupees. So your assessed income has moved from 70 to 130. So what is the tax payable basically? Tax payable has moved from 21 to 39 rupees. So disputed tax is 18 rupees only. So if it to be very simple, I would just fix up as a chartered accountant, I would just take a computation of income issued along with the assessment order and along with notice of demand under section 126. I would compare tax payable as per my return, that is return income, and tax payable as per that working. Subject to the tax payable working is correct. If tax payable working is not correct, I have still an option available where I can make an application under 54 currently and request an assessing officer to please pass 154 order immediately so I can file a declaration. Even if that is not passed, but my 154 application is pending, I can still file a declaration and wait for 154 application. So what the designated authority will do, you will pass a 154 application and revisit the demand and then give you a certificate stating that this is the amount which is payable, how much is paid and what is the balance. So it's a very simple. It looks at that what is the, in nutshell, the difference of 18 rupees would be what? It's 30% on 60 rupees. 60 rupees is my addition. So my additions or the disputed additions, if you calculate tax, it should come over there. But we are comparing tax payable because in case of individual, it may not be straight 30%. There would be a slab benefits available. There would be different source of incomes which may be 20%, 15%. So it's always better to compare tax payable at the computation level with return income level. Where the appeal is pending at CIT appeal. So you have already got some relief. You have filed an appeal wherein you are accepting a particular undisputed or disputed income and certain grounds you are still contesting before CIT appeal technically. And there is also some penalty. Of course, you will get a penalty waiver completely. There's no issue as far as that is concerned. But the question is, whatever you are contesting before the CIT appeal, that on that the disputed tax will be contested, and on the grounds which you are not contesting is technically payable immediately. So if you have out of in this example where 10 rupees you are not contesting, so tax payable on 10 is completely payable right now, but on which you are contesting will be payable, that you will pay along with the complete calculation along with tax and interest. On this contested issues, you will get a benefit under BSP. Again, coming to when disputed tax due to notice of enhancement given by CIT appeal. CIT appeal has wide powers under section 245. And last 1 year or 2 years, my personal experiences, after this VSV scheme has come in, our section 68 amendment has been made where 60% tax has been levied, the CIT appeal are left, right and center, enhancing the additions. So it happens, there is my return income is 100, my assessed income is 200. I go to CIT appeal to get a relief and I come with another income assessed by CIT appeal at 300. So there is an enhancement with that. The question is now there is already notice for enhancement has been given by CIT appeal, pending by CIT appeal before 31st January. So whether I have to pay tax on that, question is yes. You will have to consider that also as far as disputed income is concerned. So the disputed addition was only 50 rupees. So in the case of bogus purchase, if the assessing officer only made an addition of 10% of bogus purchases, but CIT appeal says, sorry, I'll make an 100%. I will not make 10% addition, profit embedded in the purchases. I'll make an 100% addition. So I want to enhance your income. So after this notice of enhancement, your income technically would be 70 rupees. So then you have to pay tax on 70. So though the CIT appeal is pending and you have a disputing addition only of rupees 50, the enhancement notice has been given. So it will be included. Now, this enhancement notice was technically in the first FAQ was enhancement notice issued up to 31st January. Yesterday's FAQ it says any notice of enhancement issued before the date of circular, that is before the 4th December 2020, that on that amount also you will have to pay if you want to offer BSV. So it's, I fail to understand. So any enhancement notice between 31st January to 4th December. Now on that enhancement amount also you will have to pay the tax if you want to opt for that particular appeal under the BSV. It's an obnoxious. Why this has been done, I don't know. But what I can think is, because in last 6 months, my personal experience and my own client cases, I've seen that there has been enhancement notices has been issued, especially in case of such bogus purchases where the enhancement is happening. And they, according to them, they feel, okay, let's collect some revenue on this enhancement. If the enhancement notice is issued after yesterday's FAQ, that is 4th December, that is today, or from today up to 31st December, then you don't have to pay. You will get a relief on that. That will not be considered as a disputed income, and no disputed tax will be calculated on that. When disputed tax due to appeal disposed of by ITAT and pending before High Court. So again, this is clear that if the income contested is 70 lakhs in the previous and there was some relief granted, because I'm also considering an enhancement was done by CAT. So there was a 70 lakhs appeal. That is relief granted by ITAT of 40 rupees. So disputed income now 30, which have gone into High Court. And revenue has also filed an appeal for the relief granted of rupees 40. So how much tax I have to pay in this case? Now on the disputed income which I am contesting, which is 30 rupees, amount payable is 9 rupees, of course. So I'll pay 9 rupees. As far as 40 rupees on which revenue has filed an appeal, if I want to settle, see, I have an option. Please make a note of it. I have an option. I may settle only my revenue, my appeal, and pay 9 rupees and opt for BSV. Let department's appeal be contested. I have an option to settle both the appeals also. I can make a single application. I can make 2 separate applications. All procedure permits me. But if I presume that I want to settle the revenue appeal at this stage also. So in this case, the revenue is appealed because the disputed income is 40 rupees and disputed tax on the same comes to 12 rupees. The 50% of the same would have to be payable. So it would be 6 rupees. Accordingly, I will be paying 15 rupees on that. The next slide I just worked out, like if you are settling your appeal and revenues appeals are not been settled, and if you lose on the revenue appeal, what could be the final amount payable? So you might have to pay complete 12 plus along with the interest, for an example. So basically the intention of this slide is that when we are working it, we need to present to our clients. We need to actually work out what could be the, if I lose an appeal by litigating, what could be the possible impact of tax? If I'm opting for BSV, how much tax waiver I'm getting? And we have what my suggestion, what we have been doing in our offices also is that I am actually made my staff to calculate what is the tax waiver I am getting. If for any appeals which are disputed since more than 4 to 5 years, assessment year 16, 17, 15, 16, you are getting immense tax benefit by way of interest waiver, because the interest keeps on multiplying 13%. So appeal, more the older appeal, I think so waiver benefit is much higher. Because if the appeal pertains to 2007, 8, 9, 9, 10, much before 10 years, the interest itself accumulated under 234A, B, C, and after issue of demand notice under section 220 would have gone, would almost be equal to tax due. So the benefit of waiver available under that is, and if you lose, then even if you get a part relief, let's take an example, 100 rupees is a tax dues and interest is 100 rupees, 200, and you are actually paying only 100. And if you litigate, out of 100, if you win on 50 rupees also, but the balance 50 will become again an 100 because of an interest implications. Again, this is another slide considering a case where I filed a Supreme Court, where I also filed an appeal and revenue also appeal. In fact, it's a similar calculations. I'll just keep this. Considering the search operations, there's no difference. Only thing is tax has to be calculated at 125%. That's all. So if my disputed tax in this example which I've taken, it is the same first example where 21 minus 36 is 15 rupees is the tax, but this 15 has to be now voted by 1.25. So I have to add another 25%, which will come to 18.75. Cases not covered. Which are the cases which are not covered where I cannot go under BSV? I briefly touched upon the search cases where disputed tax is more than 5 crores per year. So where the disputed tax is more than 5 crores per year, you cannot opt for BSV. prosecution cases under the Income Tax Act or IPC filed by the department. Last 2-3 years, a lot of prosecution cases have been initiated in case of lot of assessors. So if the prosecution cases have been filed against a particular assessee, you cannot opt for VSV for that particular assessment year. That has been clarified now. There was a difference of opinion. There was a controversy that if, because the prosecution has been lodged, I cannot actually opt for VSV also. But now it is quite clarified very well in the FAQs also, that if the prosecution has been initiated in respect of additions or matters pertaining to assessment year 16-17, then only for AY 16-17 you cannot opt for VSV, but you can opt for VSV for all other years. Cases relating to undisclosed foreign income and assets or cases completed on the basis of information from foreign countries. So all the cases in relation to Mauritius, Luxembourg leakage documents, Panama leakage documents, which are pending at various authorities in today's time. Those are in relation to undisclosed foreign assets, which can be assessed for 16 years. As you know, time limit for reopening the cases is 6 years in case of undisclosed Indian assets. But in case of undisclosed foreign assets, the department has time limit available under the Income Tax Act of 16 years. So if those are cases related to disputes or appeals are pending in relation to that, those cannot be settled. The matter is very clear. The reason over here is because I remember somewhere in 2016 there was a specific amnesty scheme was came in, wherein the undisclosed foreign income and assets could have been disclosed, and post a lot of people would have actually opted for that particular scheme. And those who have not opted for that particular scheme, the government does not want to give any benefit to them by any form. Otherwise, what will happen is they will get a benefit of interest and penalty just by paying 30% tax and bring in all the assets wherever the disputes are pending. Cases covered under IPC, the unlawful activities prevention. So there are a lot of cases where the tax additions have been made pursuant to actions under the criminal law, under the Indian Penal Code, under the unlawful activities. I know there are tribunal appeals pending as of today also in case of Harshad Mehta, in case of Telgi, in case of a lot of other acts where the NDPS Act, PMLA Act, Kofe Posa Benami Acts have been invoked, and also a simultaneous action has been taken under the Tax Act. So those particular cases would not be covered. You are not eligible if such cases are pending against you. Refund of taxes paid. So I have discussed initially that if any taxes has been paid pursuant to a declaration file, after a declaration file, no refund will be granted. But if you have paid before filing a declaration, let's take an example. The assessment year 17-18 assessment has been made somewhere in 31st December 2019, and assessor wanted to buy the piece. He says, let's pay tax along with the interest, whatever is demand under section 156. I'm paying it, but I'll dispute in the appeal. So you have paid tax and interest. Fortunately, if you pay tax and interest and your appeal is pending, you can now opt for VSV and claim a refund, because the tax under the VSV you only have to pay disputed tax, not an interest of 234A, B, C, and 220 if any. You don't have to pay. So those interests would be refundable. So you can claim a refund by filing these declarations. Obviously, you will not get interest on such a refund. That's the thing. Or if any part payments have been made, appeals were pending before CID or tribunal and you have got the part relief, but your refunds are still due, then also you can, in respect of undisputed issues, you can go into VSP. And if the position is a refund, you may get a refund, but interest under 244A shall be waived. So in certain cases where the part relief is been received, you may have to work out that is it better, because the disputed additions pending over the higher forum would be very small, but you would have got the major relief. And because of this major relief, you are already in a refund position. If you go under this, you are losing interest under 244A. So if you want to claim 244A, you continue appeal, don't offer VSV. Take a chance on the undisputed addition, but still you get a 244A interest. Any amount paid in pursuance to scheme shall not be refundable under any circumstances. That we have already discussed. Then there are certain clarifications, FAQs have been issued. I've tried to collate which according to me are important, which I feel that yes, we should at least discuss this. There may be many more issues we try to cover up in that question and answer session in last 15-20 minutes. So cases where more than one issues are involved in appeal. When more than one, what could be done if I have to go into this? Where more than one issues are involved, declaration need to be filed for all issues. So what it says, if there are certain addition of section 68, long-term capital gains addition is there, short-term addition is there. So there are multiple issues involved in that. Whether I can opt BSC scheme only in respect of two issues and I continue to litigate in 2 years, answer is no, you cannot. You have to settle that whole appeal as such, whatever are the issues. Otherwise, what will happen? Where you feel that your case is weak, you can opt for a VST, which government does not want. Government wants to go for a VST wherever, even the government has a strong case. You have to opt for all issues, irrespective. Cases of favorable decision at higher forum. In case of a favorable decision on issue at higher forum, payment of only 50% of disputed tax even in the cases which he has filed appeal. So let's take an example. This is a good benefit available. This is basically a higher forum order. It says High Court and Supreme Court. So if for a particular assessment here, the matter was litigated up to High Court and Supreme Court, and you received an order in your favor. But the assessing officer, because at that moment when the assessment was made, the High Court or Supreme Court orders in your favor were not available. In your own case, please mind it, not in other cases. In your own case. But subsequent higher forum cases, higher forums favorable decision has come. You can opt for VSC in the other assessment years, but you only have to pay 50% of disputed tax. So it's as good as they are treating this at par with the departmental appeal, because you have a favorable decision at higher forum. Obviously, you are not going to pay 100% and withdraw the appeal, because you know you are covered by your own case, higher forum, if it's a high court decision. And generally, nobody would actually, if you have a high court decision in your own case, why should I pay even 50%? Why would assessee pay? I'm sure that no assessee will pay. But there may be some assessees where a high court has given in your favor and department has gone in Supreme Court. So there is a pendency for a particular year in Supreme Court also. And there is other assessment years that is they are still pending at this commissioner level or NTA level. So decision may be taken considering the matter issue involved. Then let's settle everything, because I'm getting a chance of paying only 50% even for the disputes, even for the issues for the assessment year where the appeals are not decided in my favor. So this is a welcome move, though it has a very limited application, and it has come to by FAQ because of certain representation made in a certain specific cases. Appeal has to be withdrawn. Everybody knows this is of course a procedural thing which appeal has to be withdrawn once you are filing and before the issuance of final certificate for settling dispute. Taxpayer would be required to submit the proof of withdrawal along with the intimation of the payment. So you have to submit once you receive the final certificate before the issuance. So they will give you a tax calculation sheet. You make the tax payments, withdraw the appeal, and just send it, and then the final certificate will be issued. In case of reduction in loss, so if the addition has been made, you had your return of income claimed 100 rupees as a loss, and there is an addition made. So after that addition, your loss has come down from 100 to 50 rupees. So what to be done? How to pay? So you have two options available. Either you pay the notional tax amount by which the loss has been reduced. So if your loss has been reduced from 100 to 50, you pay tax on 50 rupees under this particular scheme, and you can carry forward 100 rupees as it is under any particular. So if that loss, technically what has happened, let's take an example, your losses pertaining to assessment year 16-17, and you have already adjusted loss over the period, but the additions made are still been disputed at the appeals. Then you can pay tax on those additions so that your loss is not affected over a period. Or accept the reduce. And in case, if I would say you have an option available, if the losses have not been adjusted over a period, you just file BSV and accept that my losses would go down. You don't pay any tax in the BSV scheme. So it's a good option available. Similar option is available to a MAT credit, because once the loss goes down, your MAT credit also accordingly gets affected. So if there is a reduction in a MAT credit or increase in the MAT credit, you can actually, you have an option available wherein you can take an impact by reduction in the MAT credit or pay tax and continue with the MAT credit available today. I think so. There's a separate sheets on this. I will also try to. I've given some examples on MAT credit and loss working also in my subsequent slides. When it comes, we'll discuss it further. Process, what is the process? So before we go to the certain important FAQs, uh, let's go through a process. The process is determined in section 4 and section 5. So taxpayer to withdraw appeal from appellate forums, taxpayer withdraw any proceedings for arbitration, conciliation or mediation. Now, this was an initial provision of the law. It said that you have to withdraw the appeal before and then make an application. Now it's not required, please. So you need not withdraw appeal today. You have to first file a declaration under 4. So taxpayer to file declaration in specified form along with proof of such withdrawal of appeal. So now the proof of such withdrawal of such appeal is not required. Please make a note. I mentioned it here because this is the provision of law. Then there is a relief granted. So you have to file withdrawal of such appeal along with the declaration. Now you need not file because the withdrawal will happen once the undertaking is there. Once you receive a amount payable determined by a designated authority under 5.1, then only the withdrawal has to be done. So now the withdrawal has not to be done today. You can just file a declaration. Along with the declaration under 4.5, you have to give an undertaking waiving his right, direct or indirectly, to seek or pursue any remedy or claim in relation to tax arrears under any law. After the declaration has been filed, designated authority within 15 days to determine the amount payable by the taxpayer. So he has to intimate what is the amount payable by you under the VSK scheme within 15 days. Unfortunately, after filing the declaration, even in months and 2 months, you are not receiving anything, any communication from designated authority as of today, though he was supposed to send you within 15 days. After the intimation is received, taxpayer to pay the amount determined by the designated authority within 15 days. Now this within 15 days, as I mentioned earlier, has been extended up to 31st March 21 and inform the designated authority of such payment made. And along with this, now you have to also give the appeal letter, withdrawal appeal, which you have already filed, and withdrawal appeal memo. You have to file it with the designated authorities along with the intimation of payment. So that's a brief process. What are the forms prescribed? Form 1 is prescribed for file declaration under section 4.1. So you have to fill up the form 1 for filing a declaration under VSV. Then there is a form 2 of an undertaking prescribed under section 4.5, stating that assessor is ready to waive his right. So I'm waiving my right. So it's a declaration. Then there is a form 3, which says form of certificate under 5.1. That is the calculation of tax, which you have to pay within 15 days, now 31st March 21. Form 4 is to be given by us, intimating the payment made, which was determined in form 3. So whatever is the amount determined in the form 3, you have to intimate by way of form 4. Please make a note, if the amount intimated at the form 3 is, you are not satisfied with the calculation, you have a procedure to be followed wherein you can dispute that tax calculations and you can request the designated authority to rework. So that procedure is there. There are certain FAQs on that which needs to be considered. Once the form 4 has been given to you, along with this form 4, now you are also required to file appeal withdrawal letter. Once the appeal withdrawal letter and the payments are given, then full and final settlement tax order will be passed by the authorities in form number 5. Now coming to FAQs, various issues in relation to applicability, allowability, calculation relation. So I choose certain which according to me I thought I should have some comment on it. So one is transfer pricing, which comes to my mind. You have a transfer pricing issue. There's some addition made by TPO, and you have filed an appeal against that. So in the transfer pricing, there is a concept of section 92E, which says if there is a transfer pricing adjustment been made, primary adjustment, then there would be a secondary adjustment also. And by secondary adjustment, there would be an addition. Let's take an example. I have debited some amounts to some foreign associated enterprise, and TP arm's length price says that this amount was excess. You have paid excess, you have claimed expenses, and you have disallowed that. You accepted that, and you make the payment. But there is a secondary adjustment which says that excess which was remitted would be now treated as loan, and you also have to recover interest and offer for tax every year. This is what secondary adjustment is. Now, if you want to settle the dispute in respect of primary adjustment, would secondary adjustment automatically be covered? That is the question which is available. Now the FAQ 54 has clarified, the last initial FAQ itself, that secondary adjustment will continue. Only primary adjustment will settle, but you will have to still make a secondary adjustment in respect of interest till the time the excess payment which was made to a foreign associate is not brought back to India. So that will continue. Next point. Now, there are certain questions, certain FAQs, certain issues which I have also tried to raise it, though it may not appear. Can order by Honorable ITAT be considered as favorable order as addition at 8% stroke 100% is reduced to 3%, which is less than 5% for which VSP has been opted? So it's a very specific bogus purchases case, which is many cases are there, wherein the addition has been made by AO at 100%, CAT makes 8%, ITAT makes 3%. So whether it should just 3%, because I have got a reduction, I have got a benefit. So I have got a benefit up to 5%. So should it be considered as a favorable to that extent for the purpose of applying 50% benefit? As per second provision to 3 of VSP, the favorable order should be of assessee only and cannot be in any case of other assessee with similar identical files. So if only in my case this 5% has been reduced, then it would be treated as a favorable order. But in most of cases, because the ITT is reducing the percentage, you cannot apply somebody else assesses favorable order to me. That's a question. So if it is in favorable of in my assessor's own case, I can opt for 50% beneficial. This question is because of that. As per the provisions of section 246(1)(a) of the Income Tax Act, an intimation under 143(1) and order on 271(c) is order applicable. I think so. Yesterday's FAQ makes this redundant. My question, what I had tried to raise yesterday presentation, but now today morning when I read yesterday's FAQ, they have clarified now that an intimation under section 143(1), that was my view, which I have mentioned in this slide, that is an order and why it should not be eligible for VSP. Now they have clarified by FAQ yesterday that the intimation under section 143(1) is also an order in nature and therefore would be eligible for VSP scheme. So I would like to go, but there was some technical, initially there was some technical issue, hitch, because in online form 1 you were not able to select, and there was no act which says that under which section the order is passed. So in drop down list 143(1) was not appearing. So what to do? That was the question raised by me. Of course, my opinion was always that you can file a VSP in response to 143(1). Fortunately, FAQ has come yesterday, and so now it becomes settled. So you need not need to approach anybody or go to High Court for this. FAQ has already come, so I'm sure there will be changes also in the schema also, where the 143(1) field may come in the form. So if there is an intimation been received under 143(1) for any particular assessment here, the assessees can think of instead, and you are making an application under 154 to and fro with the CPC. The demands are not getting resolved. Either you have to file an appeal if demands are not getting resolved. But if you still feel that I may settle this issue and pay tax, forget interest and bills, because it may have a disputed issue on that, or there's actually some difficulty in my return of income, you may opt for this particular scheme. Nothing stops. Please give me a minute, sir. I'll just wait for a water. Now, I'm just extending, as I mentioned in my earlier slide, that there is a favorable order in case of other assessments, whether it can be used as a favorable in my favor. Now, if there is a disputed issue in the earlier years, appeal of assessee was allowed by CIT appeals. Again, the same, the department went into appeal before the ITAT. ITAT dismissed the appeal of department on the ground of low tax effect. So, whether I should consider a favorable order. Now, there is no judgment on the merits of the case. Can I still consider it as a favorable order in my own case and I opt for 50% of the disputed tax? Question is that there's no clarification. In subsequent year also, because in second particular year, disallowance on the same issue was made by the EO. The assessee has preferred an appeal before CIT appeal, which was pending on the specified date. Now the assessee wants to offer the DT VSP scheme. What would be the quantum of disputed tax? 100% or 50%? Considering the fact that appeal of the department on disputed issue was dismissed by ITT. My answer would be, by reading the provision, second provision to section 3 of the DA, it seems that dismissal of appeal by the appellate tribunal will also amount to order of appellate tribunal. So the department's appeal is dismissed due to low tax effect is also an order of appellate tribunal. So once it's an order of appellate tribunal, due to which I have not paid any tax, or those issues have been decided in my favor in some particular assessment here, obviously it would be treated as in that order in my favor. So it would be treated as a favorable order. So I already have a favorable order of higher forum. Once I have a favorable order of higher forum, maybe because of the department's appeal dismissed because of low tax effect, still according to me, I am eligible for concessional rate of 50% of disputed balance. ITD order received on 29 December 2019. We have not filed an appeal before High Court yet. High Court requires 120 days. Please mind it. Can we still go for VSV scheme even though there is delay in filing appeal before High Court? Yes, the answer is eligible for VSV since the time limit for filing the appeal is not over on cutoff date 31st January 2020. Now let's take an example. Your time limit was completed on 31st January 2020. You have filed an appeal on 5th Feb 2020. That is after delay of 5 days. Would you still be eligible? You have filed a condonation request on 5th Feb. That please file, and that condonation has been accepted. Would it be eligible? My view was yes. Fortunately, yesterday's FAQ, which I could not cover that yesterday's FAQ in my presentation, late night it came in. I could not cover that. It says that if the condonation delay has been filed before 31st January 2020, condonation application has been filed before the date of the circular, last circular, and that condonation has been accepted, then you will be eligible to go for the VSV scheme. So your condonation should have been filed before the 4th December 2020. I'm just going to that particular point. Where the taxpayer in whose case the time limit for filing of appeal has expired before 31st January 2020, but an application for condonation of delay has been filed is eligible if the time limit for filing appeal expired during the period 1st April 19 to 31st January 20, both dates included, and the application for condonation is filed before date of issue of this circular, that is before 4th December 2020, and appeal is admitted by appellate authority before date of filing of the declaration. Such appeal will be deemed to be pending on 31st January. So if your appeal was delayed also and your time was already expired on 31st January, before 31st January 20, and you have filed a condonation application which has been accepted by appellate authority, you will be. Now the question is, they say it is accepted by appellate authority. What do you mean by acceptance? Now if I filed an appeal in February 2020, I don't have anything because of the COVID period. There is a procedure of acceptance of appeal in High Court, where at the stage of admission itself, the condonation application is decided first and the appeal is admitted. There is a procedure of admission and then it is heard on merits. But before CIT and before ITT, there is no procedure. You are directly at the time when the hearing has been fixed for the merits, at that time condonation application will be decided. There is no separate hearing for deciding on the condonation application. So how do you determine this? But in any case, how do you determine that it is admitted by appellate authority? So in my view, you would be still eligible. You should actually make an application to go ahead. Assessee had filed rectification application under section 154, which is pending before you. Now assessee filed DS and AO rejected the 154 petition. Can assessee file appeal before CIT appeal in November and go for DSC? No, the rectification order passed by the O is not before the specified date, that is January 31st, 2020. Therefore, a deemed appeal, non-appeal against the exists. So, if you have not filed an appeal against original 143.3 order, you thought I should make the 154 application. But 154 application has been rejected today. So the 154 application, so appeal is not pending as on 31st Jan, so you are not eligible. But now a second process comes. If you would have filed an appeal against 143.3, even along with the condonation of delay, you would have been technically eligible. But in this case, you wouldn't be eligible. If the quantum is pending before CIT appeal and the assessing officer order passed to can assessing go for VSV only for penalty. It's very clear, FAQ number 8, that if you want to opt for a quantum, if you're not opting for a quantum appeal under the VSV, you cannot opt for penalty. You should opt for quantum, pay disputed tax in the quantum appeal. Then you get a 100% waiver of the penalty. You cannot say that quantum tax I would dispute, but I want to go for a penalty. No, you cannot. You can offer penalty only when the penalty appeal is pending. There is no dispute on quantum. There is only dispute on penalty. Then you can go for a VSV and pay 25% of the penalty. But if the quantum appeal is also pending and penalty is also pending, sorry, you have to go for both. You are not allowed to go only for the penalty appeal in such cases. If the original assessment order passed by AO contains a mistake apparent on record in one of the issues and additions, can assessee file application under VSV scheme and simultaneously rectification application under 152 AO? Time limit for filing rectification has not expired. Let's take an example. A 143.3 order has been passed and he does the calculation errors of the tax in that. So I make an application under 154. I have not made an application because I have already filed an appeal against that order. So I thought that when the appeal law will be decided, I will look into it and we will see into it. There's some disturbance. Yeah. So I have already filed an appeal against the 143.3 order. So I feel that whatever calculation errors are there, I need not file a rectification application. When the appeal is decided, ultimately I would have got the benefit and order giving effect is passed to CIT appeal. At that time, I will look into it. But today, because I want to go for a VSV, if I do not make a rectification application under 124, the designated authority will calculate the tax payable as per the computation of income issued along with 143, which itself is a wrong. So what should I do in this case? Yes, I should make a rectification application. I should request AO to pass the rectification order immediately and revise the demand. And after receipt of rectification, assessee can avail the benefit of VSV on other issues which are pending before the appeal. So at least while calculating the amount payable in by the designated authority, you will get the correct calculations. It should not happen that because of the incorrect calculations, you are not able to opt. Taxpayer files declaration under VSV for matter under appeal before IDT with an amount payable, say INR 15 lakhs. Designated authority while issuing certificate under section 5(1) of the Act determines the amount payable as INR 20 lakhs. Taxpayer would not like to settle the dispute at INR 20 lakhs. Section 4(2) deems that the IDT appeal to be withdrawn from the date when certificate is issued under section 5(1). In that case, what would be the recourse to taxpayer with respect to such deemed withdrawal of appeal since he shall not settle the dispute under VSV? So, if the designated authority has calculated tax which is not in conformity with the calculation of the assessment, and therefore you opt not to make the payment, what will happen? Though there is a deeming provision under section 4(2) which says once the certificate is issued under section 5(1), certificate is issued under 5(1) for the tax calculation, whether he will be able to settle such dispute. In my view, we can write to the designated authority to rectify the tax calculation, and we have two options available basically. We can write to rectify the tax calculation and issue a fresh certificate. Further, there is no bar on refiling a fresh application under VSV. If the calculation of tax by the designated authority is not in accordance with the scheme and the designated authority does not send a revised certificate, assessee can file a writ. So we have two options available. You can approach the designated or the DA to rectify the tax calculation and issue a fresh certificate, or you can also make a refiling of the tax for that purpose. The question is, if the payment has not been made within 15 days of issuance of Form 3, that is certificate of 5(1), declaration under Form 1 shall be treated as void. Now, he has raised a demand of 20 lakhs. I have only 15 days time. Fortunately, now this has been extended to 31st March. But there may be a situation where you are not getting a response from it. So then after that particular date, it automatically becomes void. So what happens to that? Therefore, the appeal would stand withdrawn. Therefore, the appeal would not stand withdrawn because it has become void. So if I'm not making a payment within 15 days or before cutoff date of 31st March 21, automatically Form 1 itself will be treated void. Therefore, the appeal would not stand withdrawn. And according to me, therefore, all those appeals which were treated to be withdrawn under the deeming provisions will also get revived. Such cases which was not eligible for VSPS in January as the demand in dispute was more than 5 crores. Subsequently, a CIT appeal order has come and now dispute is less than 5 crores. There was in January, there was a search appeal which was pending before the CIT appeal. So the demand in dispute was more than 5 crores, which has been reduced after the CIT attack. So as on announcement date of scheme, the case was not eligible. Now the criteria remains the same, the assessee is eligible. If he files, will he get the certificate from PCIT? No. Only appeals pending or deemed appeals as on specific date are eligible for a VSV. So question is, what is an appeal pending on 31st January is a CIT appeal pending. What order has been passed by CIT appeal order has to be ignored at that particular date, though that order has been passed. In fact, there is also clarification. Let's take an example. I have an order, my appeal is pending on 31st January 2020. And it's today, it's almost more than 10-11 months, the appeals are still going on. And the appeal order has been decided against you. Now you feel because appeal order has been decided against me, let's go for VSV. According to me, you can go. Because your appeal was pending on 31st January 2020. Though one view says that you cannot, but according to me, you can go because there is an appeal pending on 31st January 2020. This is the only criteria. The order is a subsequent to it. That's the next question which I was mentioning. Under what section of VSV Act is taxpayer not allowed to file VSV if the pending appeal is specified and now decided post 31st Jan against him? Answer. Scheme is very clear. Appeal must be pending as on specified date and or time of the government access scheme up to 30 without paying any interest or penalty. Specified date remains the same. Designated authority may reject the application. In case of genuine hardship or due to unavoidable it was not possible to comply, one may have to approach the High Court. So according to me, they may reject it in such cases where the appeal is pending, but the order has been appeal order has been decided post 31st January. But according to me, you should be eligible. And if it is rejected, nothing stops you from disputing and filing a petition before the High Court. But most probably, according to me, they should decide it. Again, the same question. So, if the ITT appeal is pending before ITT on 31st January 20 and the order is pronounced after, whether I can approach, my answer would be, as per Rule 34 of the ITT rules, after hearing the appeal, the order has to be pronounced and signed in the court. Till the order is pronounced and signed, the appeal is considered as pending. So, even if the hearing is, order is pronounced after 31st January, though the hearing has taken place before 31st January, the order is not pronounced, it will be considered as a pending. And according to me, you shall be eligible for avail the benefit of the scheme. Now, of course, this has also been clarified in such case we have the relator. Is the interest under section 221 of the Act also waived on the settlement of the dispute? Yes, interest under 221. 221 is the interest payable on the demand notice issued after the demand notice issued under section 156. So it is payable. Can one continue? I've already answered this. Can one continue to dispute the quantum additions and settle the penalty appeal? No, you cannot. Again, we have discussed this. In case if there is a difference in amount intimated by DA and amount declared by taxpayer under declaration, what is likely to be remedy available to taxpayer? Will there be any scope for email communication with DA to explain the difference? As per FAQ 46, DA shall be able to amend his orders under clause 5 to rectify any apparent errors. However, the procedure is not described, but according to me, you can talk to DA today and he will do a rectification. MAT and unabsorbed depreciation. There is two, as I said earlier also, I would like to just look into it, how the MAT and unabsorbed depreciation will be calculated. Because what happens is if there is a MAT credit, so there is no tax impact. In a lot of cases, the unabsorbed depreciation, all losses on MAT credits are being carried forward since the years and they have never been adjusted. So if never been adjusted and there is no tax liability payable by settling a particular issue, why we should not? So there are two options available in such cases, which says, in case where the assessed income is a loss or the brought forward loss unabsorbed depreciation is more than the assessed income, such assessee can either opt to pay tax on the amount by which loss unabsorbed depreciation got reduced and carry forward the entire loss, or opt not to pay any amount in the scheme and carry forward only the balance loss. So as I said, if you want to, if your loss has been already adjusted in future, it would be appropriate for you to pay the tax to the extent of loss would have gone down because of the disputed additions. But if you have not been able to adjust the loss over a period of time and that loss is still continuing today, then you can also make an application in the scheme where the carry forward loss itself will be reduced and you are not paying any tax. These options are also applicable to MAT credit. So you can make a payment of the tax and continue the MAT credit as it is without considering the additions made in the assessment. Or at your options, if the MAT credit has been carried forward and it has been adjusted in the future, then you can opt for a VSV scheme and pay the MAT amount to the extent of the additions, disputed additions on the MAT. How do you calculate the manner of the MAT credit? Well, the dispute in relation to assessment relates to reduction in MAT credit to be carried forward. Declaration an option, as I've said, include the amount by which MAT credit to be carried forward is reduced in disputed tax and carry forward the MAT credit by ignoring such amount or carry forward the reduced MAT credit. Whether declaration exercise the options as per clause 2, carry forward the reduced MAT credit of sub-rule 1, he shall be liable to pay tax including surcharge and cess along with interest if any as a consequence of carry forward reduced MAT credit in subsequent years. So if you have adjusted the MAT credit in the future years, and because carry forward that you have reduced the MAT credit, so according to me, if the MAT credit has already been adjusted, you will have to pay interest in that particular year along with tax interest because your now carry forward MAT credit has gone down. So ideally, it would be best suited only to reduce the carry forward MAT credit if it has not been adjusted in the future. Then you pay tax under the VSC, it's a better because you're not paying interest. But if you have already reduced the MAT credit in the future, then you opt for the option 1 and pay the tax and move ahead. So I've given an example how do you calculate MAT credit. So if the assessed income as per order of AO is 80, under MAT provisions it's 150. So tax payable is 27.75. So you have paid taxes under MAT and MAT credit of 3.75 is carried forward. Now addition has been made to book profit, revised book profits have been additions and revised MAT credit has been worked out. So in such case, assessee has the following options. So you carry forward the revised MAT credit at 7.45 or pay an amount of difference in MAT credit and carry forward the original MAT, that is 3.7 something. This is another question issue that arises. The case of assessee was selected for scrutiny and assessment was done under section 143.3 by making an addition of rupees 55 lakhs to the return loss of 52. So I have returned the loss of 52 lakhs. Addition has been made to 55 lakhs. So my income after addition, assessed income becomes 3 lakhs. Assessee has carried forward the loss of 52 lakhs and utilized rupees 8 lakhs for the set off in 3 subsequent years. Balance and up some losses 44 lakhs. Now the assessee wants to avail the benefit of BSPC and ready to pay disputed tax on assessed income of rupees 3 lakhs. Further, the assessee is also ready to pay tax on the amount utilized for set off, that is 8 lakhs, and forget the new tax. So I want to do both. Whatever I added on 3 lakhs, I want to pay tax. 8 lakhs carry forward loss, I am ready to pay tax. But balance 44 lakhs, I don't want to pay tax. I don't want to have a cash outflow, and I want that loss may be waived. I will forego the unutilized loss. Would it be possible? Of course, I can avail the benefit of the scheme if the appeal is, of course, the eligibility I should be first available and my appeal should be pending. Now there is a question number 53 which we should read before we decide on that. If loss is not allowed to be adjusted by calculating disputed tax, will that loss be allowed to be carried forward? As per the amendment proposed in BSV, in case where the dispute in relation to A relates to reduction of MAT or loss, the applicant shall have options. So these are the options which again it says, and then it goes further. If loss is not allowed to be adjusted by calculating dispute, will that loss be allowed to be converted? It's a repeated story. I'll just come to answer. So it says you have just 2 options available. So once this 2 options is available, to my mind, nothing stops you. Nothing stops you to opt for both. That I will pay a tax on 3 lakhs and 8 lakhs because both the options are available to you. You can also pay the tax and you can also carry forward the reduced tax credit to the extent of the loss. So it does not say either to, though it is an option either to do this. It says either. But it does not mean that I cannot pay tax because 44 lakhs is already available in my kitty. So I can always request the designated authority to reverse 44 lakhs and collect tax only on 3 plus 8, that is 11 lakhs. In my view, such an application can be made and DA should accept this. The assessee filed a return of income declaring loss under both the normal provisions and section 115 JB of that. AO made additions under normal provisions. However, due to availability of brought forward losses, tax payable under normal provisions was nil. AO made additions to book profit and determined a book profit on which MAT is paid. According demand as assessee filed appeal before CIT for additions made under the normal provisions. Addition to book profits were not contested before the CIT appeal. CIT appeal order was passed against the assessee. Assessee filed appeal before ITT and same is pending before ITT as on 31st Jan 2020. So assessee contest filed an appeal before CIT. Since After making an addition, the provisions remain nil only as far as my computation is concerned. The MAT was stable. But additions to book profits were not contested because the MAT remains similar. So I am not contested, but I made a contestment against the normal provisions. That matter is pending before ITT. Now I have filed an additional ground also before the ITT in respect of additions made to book profit. So my book profit was revised. Technically, a book profit cannot be revised under the Act. Book profits should remain static. Any additions can be only made under the normal computations. So I take an additional ground. Now, and that appeal is pending. So what happens to those questions is whether the assessee can file under the VSK scheme for additional grounds raised before ITT which have not been raised before CIT appeal. According to me, answer is yes. If yes, do the assessing need to file separate application, VSV one for normal and other for book profit additions? Assessing, no, you need not file a single application which can be filed. And all the grounds which have been raised before ITT, even the additional grounds can be covered. So this is the, of course, I am relying upon certain other judgments because there is no clarity under the law. But ultimately, according to me, assessee has to file one application on any. However, the tax in dispute in the appeal has to be settled. So whatever grounds you have taken, wherever the tax impact is coming, that tax has to be settled. So I will cover. I would just like to make another 2 or 3 issues which I is not covered in presentation before I end up and we go into the question answer sessions. There are 3 or 4 important 5 clarifications which have come by the last night, which I would like to bring to your attention. That is a clarification FAQs issued on 4th of December 2020. I will go to the question number 59 of that, which we have already did in respect of condonation of delay. I had already covered that, which says now if your appeal has expired, time limit for filing an appeal was expired on 31st January 2020, and application for condonation has been filed before the date of issuance of this circular, that is 4th December 2020, you are still eligible if that condonation has been accepted. As I said, there is no provision under there is no practical hearing happening before CIT and ITT in respect of accepting the condonation and accepting the appeal, which happens at the High Court. So what happens in this case? But according to me, I would interpret this circular and FAQ and intention is that if you file a condonation, it would be acceptable and therefore you should be eligible for BSV. So, that condonation should have been filed before 4th December. Now, if some appeal you have not filed and you have accepted the addition and you go and file appeal today on 5th December, and then you want to get a benefit of interest by filing a BSV, right? So then you have lost it. Then there is another question number 61 which has been clarified. Whether miscellaneous application pending as on 31st January will also be covered by scheme. So if there is an ITD order which has been passed against you, dismissing your appealing completely, and you have filed a miscellaneous application against that for restoring the CID appeal order or for rectification of that order. And if that is pending, whether you can go for this, according to this, such MA is eligible, you can go. But subject to that, your appeal should have disposed of in limine. Limine in the sense it will be disputed against you. If it has gone against you and you have filed a miscellaneous application which is pending on that particular on 31st Jan, then you are eligible for the appeal. That has been clarified in question number 61. Another important clarification, as I have already mentioned, now 143(1) has been covered, so you can file an declaration for the intimation received under 143(1) because it's a nature of order. That has been clarified in FAQ question number 71 yesterday. Then, yes, question number 76 of enhancement. I said whether we have discussed on enhancement, we have also seen the calculation of tax. What does the FAQ number 76 clarifies is whether enhancement notice issued by CID post 31st January is to be taken in account for computation of disputed tax. Enhancement, what does it say? Enhancement notice issued by CID after 31st January 20, but before the date of this circular, that is before 4th December 20, shall be required to be taken into account for determining amount payable under BSV. I have already covered, this is not correct. because now any enhancement notice issued between 31st January and 4th December also will be considered as a disputed issue, and those on disputed issue I will have to pay disputed tax. Initial FAQ stated of any enhancement notice up to 31st January 20. So this FAQ has extended this from 31st January to 4th December 22. So not a correct view, but it's a FAQ, so you may have to pay tax on that. Otherwise, you may dispute in High Court. Question number 77. Whether any additional ground filed in relation to an appeal is to be considered while computing disputed tax, which I have considered. Of course, now they have clarified. My view was always that even an additional ground file which was not taken up at CID appeal, in my last slide, as I mentioned, you should actually consider it. It cannot be, because whole appeal, all issues have to be settled. And that's the intention of it. Now it clarifies. If any additional ground has been filed on or before 31st January 22, so they want to restrict it, it shall be considered for purpose of computing disputed tax. Again, this is not correct, but they have clarified it. It's very unfortunate. Let's take an example. I have filed an appeal before ITT. I have not taken certain grounds. Now I want to take a certain grounds. But if I take it after those grounds by making an amendment to a Form 36, those will not be considered for the purpose of disputed tax. That's not correct. It shall be considered only for the purpose of computing disputed on or before 31st January. Otherwise, it will not be. So what will happen is, if they are not considering those additional grounds as disputed tax, then technically you will have to pay full tax along with interest on those grounds. And you will get a benefit of interest waiver only on those grounds which you had taken it before 31st January 20, which in my view should not be the intention of the act or the object. But this FAQ is unfortunate. Then there is very important, as I said, again, certain FAQs which I discussed. Question number 80, FAQ number 80. Whether appeal against penalty that are not related to quantum assessment, like penalty under 271 capital B, capital BA, 271 BA of the Act, except, now they are writing except, are also waived upon settlement of appeal relating to disputed tax? Answer is no. Appeal against such penalty order is required to be settled separately. So you will have to pay 25% on that. Our impression was all along was that if it relates to a particular assessment here, I may be levied a penalty of 271(c) also. I would have related maybe levied a penalty of 271 capital B also for non-filing of tax audit in timely. I would have levied some penalties under 271 BE for violation of SSNT. But all actually emanates for a particular assessment here. So we were of the view up till yesterday when this FAQ came that once the penalty pertains to all, you will get complete waiver. So now this FAQ question number 80 clarifies that, no, only the 271(1)(c) would be treated, which is in relation to assessment additions, would be completely waived. As far as other penalties are concerned, you have to make a separate application. So once you make a separate application, obviously you have to pay 25% of that penalty. So after this FAQ, in fact, in our own case, we have made certain application which is pending since more than 2 months, and I have not received any certificate or Form 3 or tax calculation from the designated authority. I'm sure now they will reject this application in view of question number 80. So only recourse which would be available to assess it would be to either challenge that in High Court, that once we talk of penalty of particular assessment here in an act, it should be considered as all penalties. Question number 81. Another important, in respect, very important. Now I would just touch upon this. According to me, it's the most important. A lot of people were trying to misuse this VSP scheme and trying to use it as an amnesty scheme. I will tell you how. Let's take an example. There is some addition made of cash deposits addition has been made, or some gold deposits addition has been made. So if the cash deposit additions or loan addition has been made, and I concede by filing a declaration. Of course, it clarifies that when I'm filing a declaration, I'm not considering the addition. Question is whether I can use those cash or some stock additions or some gold additions and introduce that amount in my capital. I remember discussing in one of the forum. The issue arises that there was some addition made for assessment year 6, 7, 7, 8 in respect of excess gold found during the course of search. Now the price of the gold on that particular date was 10,000 rupees, and the addition was not even 10, sorry, yeah, maybe 10,000 for an example. So the addition was made considering 10,000 rupees. So I had to pay 3,000 rupee tax for the 10,000 rupees was the goal. So I have to pay 30% thereof disputed tax if I settle it today. If it is a search, I will pay 125%, that is 3750 maximum. If the question arose at the forum or discussion arose that if I actually opt for this particular scheme, can I treat this as my own goal? And I can sell it in the market today at 50,000 and introduce that capital in the books of accounts. Of course, my consideration was, I was always of the view at that moment of time, and I still remain of that particular view, that once I'm opting for BST, that becomes my own goal. So it does not remain from an undisclosed source. So obviously that goal will be introduced in books of accounts. I will have to as an accountant. I'm paying tax at the rate of 10,000 rupees, 10,000 rupees. So my contestant was always that it's my goal only. But I'm paying tax at 3750 is only actually increasing my cost of tax, nothing else, but it remains my guideline. And therefore, I can sell that gold today at the 50,000 rupees. So it was been thought that if there are certain disputes in relation to cash, in relation to Section 68 additions, actually that we should go for a BST scheme because you are paying tax only on 3,000 rupees. It should. I'm paying only 3%, 30% on 10,000. That is the rate of the gold or the rate of addition would be today at 50,000. So effective, it's acting as an amnesty scheme of 6 to 7%. Where by paying 3750, I'm getting gold worth rupees 50,000 in my books of accounts as introduced. Now, according to me, because this thought process was growing in the legal fraternity, I'm sure the way it happened at the time of demonetization also, they came with an obnoxious provision by increasing the rate of Section 68 to 60% plus 15% penalty to 75%. Otherwise, what people would have done, whatever cash was deposited, they would have offered in their return of income and paid 30% tax, matter would have been over. So to cover up such thought process which were going in the legal fraternity, they've come with an FAQ number 81, which I will read. In respect of some loans, addition was made under Section 68 of the Act. Appeal is pending before CID appeal, and the assessor is eligible for opting BSV. After making the payment of tax under BSV, can the assessor make entries in books by crediting the same loan in his capital account? So can I move that loan to capital because I have offered for tax, addition has been made by 68. Assessing officer says that party is not available from whom loan was taken. Nobody responded to 133.6 notice. That's why the addition has been made. And really speaking, how will I? So the question will arise. Now the answer to this is, what they say is important. No. Vivad se Vishwas is not an amnesty scheme. It only provides an option to settle appeals on contentious issues that are neither accepted by department nor the assessor. Now I don't know how this is possible. Let's take an example. There's a loan appearing in my books of Section 68. The addition has been made. And let's presume for time that this was it was an ingenuine loan. How will I repay it? If I cannot repay it, after paying tax also, should I continue this loan in my books in eternity or should I transfer it to capital after paying tax? They say you cannot transfer it to the capital. Let's take an example. If I do a transfer to capital, what will happen? Once I introduce it to capital, again you will make an addition under Section 68. Because you have introduced some amount in the capital, do you mean to say if you cannot move it to the capital, I should continue such ingenuine loans forever in the books of accounts? It can never be finished because according to me it remains a loan. But I don't know if I am accepting it's an ingenuine today by considering to VSV scheme. So I don't know the purpose. Of course, the purpose is they don't want to give it. It seems as if it's an amnesty scheme where the loan would now be converted into a share capital or a capital of his proprietary capital, and only by paying 30% tax, so no interest, no penalty. But they are forgetting this are only in respect of those assessors. That's not an amnesty agreed, but it is respect of only those assessors who are disputing those cases in the merits. So once they are disputing those cases in the merits, everybody knows the department may or may not succeed in the appeals, and therefore this scheme has come. But once a person is opting for the scheme, then obviously he's making the payment of due tax on the disputed income. And once that disputed tax has been paid on the disputed income, obviously that is always a concept of what we say that this amount becomes my own. Telescopy. There is a theory of telescopy under the Income Tax Act, that if I earn this particular income, I can use it in the manner which I want because I paid the taxes. So I I can convert this loan into capital, in my view, still remains it. But unfortunately, question number 81 has may open up Pandora's box of litigations, because wherever loans, unsecured loans or such additions have been made, unsecured, unverified creditors, and they are appearing in your books of accounts. After going to a BSC scheme, what should I do as an auditor? I will have to transfer this to capital. I don't have any other thing. So once I transfer it to capital, do you mean to say that on that transfer it will be treated as a separate transaction and you will again introduce section 68 on that date? According to me, it will not be sustainable under the Income Tax Act. So though they have said no, this may be to discourage such practices. But according to me, that could be the only recourse. Another important FAQ is question number 85. In the scenarios mentioned in question, I just mentioned that whether in the earlier, very first initial discussion we had, that whether I will get any time after 31st March 21 to pay additional tax within 15 days or something. So of course there's no clarity to that. But if I read question number 85, though it's not related to that, but it gives, it actually that question talks about an situation where a payment can be made after 31st March 21. I'll just read the question. In the scenarios mentioned in question number 84, it's in relation to TDS. What will the amount of tax credit if the payment of amount on settlement of section 201 appeal is more than 100% of disputed tax? For it being a search case, or for the reason that the payment is made after 31st March 21. So what is the question is that if a tax deductor who had not paid any tax and there was an action taken under section 201, he pays under the BST scheme. So whether a deductee gets a tax credit, so there was a clarification that whatever he pays, he will get a credit. That's fine. Now the second question arose in question number 85, that instead of paying 100% of that tax TDS amount, he pays 125% because it was a search related. There was a search, and during search, this TDS non-compliance was detected. So he pays 125%. Or he pays tax higher rate because he has made after 31st March 21. So in this question, they are envisaging that you can still make a higher payment after 31st March 21. And now it has been, therefore issue arises whether the deductee will get higher credit, whether you will get 110% or 125%. This question clarifies that deductee will get credit only of 100 rupees. That's fine, I agree. But question is, they are envisaging something after 31st March 21, and obviously the law provides for the last date, so you will have to give the last date notified. If that last date is notified as March 21, 31st March 21, then there won't be any scenario of paying the additional tax. But if it is notified to say another 3 months, 90 days, another, in a genuine case, they may notify, which I feel the government should do it. So you can pay another additional 10% and pay the tax up to 30th June, considering the COVID scenario is still going on. So you may levy another 10%, but extend up to 30th June. So that it is. So I try to cover the main FAQs and questions which according to me were important. And I think so it's 12:25. So if we can have any questions and answer, Devang, I was told that last 10 minutes we can consider the questions. So if you have any questions, we can consider. Thank you. Thank you very much for your patience.
Thank you, Piyush bhai. There are few questions in the chat window.
Yeah. From Bhavincha, assessee's appeal related to addition made to book profit. No appeal for computation of income under the normal. Assessee desires to settle this dispute. Will he be entitled for assessee's appeal relation to addition made to book profit? No appeal for computation of income under the normal. Assessee desires to settle. Will they be entitled for met credit? What if the assessee has won the appeal and department has filed for and now the assessee desires to settle the stay? So the question is whether he will be assessee desire to really be entitled for a MAT credit. He will be entitled for a MAT credit subject to tax payment to that extent. So there are two things. There are two options available. You claim full MAT credit and pay the tax and claim full MAT credit, or you forego MAT credit to that extent. And similarly, if the department has filed against the MAT credit, then you continue for the MAT credit and pay 50% of the tax increase because of the MAT additions, basically. Paras Dada. Appeal was pending before ITT as on 31st January 2020. However, in March 2020, ITT has passed order giving direction to remit the matter to the assessment stage with a direction to TTO to deal with matter by a fresh. Now, by fresh means I am sure de novo assessment. With this direction, the matter stands restored to the file at the assessment stage for fresh determination. In this case, whether we can go for VLC. If yes, what to mention, inform again which appeal is pending. FAQ to say to mention appeal pending. FAQ says to mention appeal pending before CIT appeal. Correct. You have to. FAQ is very clear. It says appeal before CIT appeal, and you should go for VLC. You have answered the question, I'm sure. Falgunis, if refund of subsequent years have been adjusted, and now if I'm paying taxes per VSP, so how do I claim refund of the tax adjusted? If refund of subsequent years have been adjusted, and now if I'm paying taxes per, if the refund of subsequent years have been adjusted, obviously, then you will get a tax credit in your declaration itself. So what is tax paid under that particular declarations? You will have to take a tax credit, and hereafter only the balance VSP has to be paid. I would suggest one thing, that let's take an example. Your tax payable was 30 rupees for this particular year, and there were certain refunds due of 10 rupees of the previous assessment year. So this 10 rupees you should adjust as a tax payable because refund order has been already passed in your favor. Adjusting this refund, there would be a refund adjustment advice. So after 30 minus 10, you will pay only the net balance. So there will be no need arise of the refund because the refund adjusted you should be getting a tax credit in the declaration. Yes, Paras, I agree. Assessment is not a de novo. So it's only with a specific direction. Still, according to me, you can go to the March 20 as a pending before CIT. You should mention as a CIT appeal that FAQ is very clear and you should be eligible for this. I think so. I've covered from the chat box.
Yeah. If any member has any additional questions, and member can unmute themselves and ask the question.
Vishwas.
Kishore bhai.
So my appeal is pending before ITAT, but as it was not, CIT appeal was not in our favor, so we have paid balance tax also. First at the time of admission of the CIT 15-20% and full 80% is also paid with interest, whatever. So now nothing is payable as such. So the simple procedure has to be done, and whether the interest, whatever paid,
you will get refund.
Okay. And what are the designated authorities as such? If they have given the list, or we have to contact somebody or to the ITO before going to the process? Practical. No, I'm asking from the practical perspective.
From the practical front, you can online make an application. So you have to communicate through an online portal with the designated authority. No. Only if you want to do a 154 application, you can now talk to your ITO on the phone and tell them, please up 154 application upload kijiye. Pass कीजिए order giving effect and do a rectification.
No,
so if there is any dispute with DA calculations, then I think so you need to do only online practically.
Okay, so I have to first file online application, form 1, whatever, but yes, no need to contact AO, concern AO, or the online only. I will receive the calculation sheet and then I have to withdraw this ITAT.
Yes. Okay. But I don't know, Kishore bhai, my experience is bad. Nowadays, nobody has received calculations are been coming form 3. Has anybody, I don't know, across the board somebody received? मैंने तो जितने applications किए किसी में form 3 hardly 1 या 2 में आया है, that's all. तो उसमें भी calculation errors है. That is the difference. So wherever the acceptability तो आई नहीं है अभी तक.
What is the practical things? We have to file one before 31st December. That is one.
Yes.
And then we have to
wait.
Then wait. Okay. Yes. Thank you.
Any other member has any questions? We'll just wait for 2 minutes. If not, then we'll close the session of the day. I think this is it, Piyush bhai. I like to take the opportunity to convey vote of thanks as well on behalf of the members of Andheri West Study Circle. Given that December is a busy season, not only stat audit, but there are so many other due dates to catch up. You took out time and to take up a session for our members. We thank you and would like to give a big round of applause on behalf of all the members.
Thank you very much. Thank you. Thank you.
With this, we end today's session. The YouTube link is also available on Andheri West Study Circle, page on the YouTube, and the next session date will be conveyed on the WhatsApp group. Thank you everyone for your active participation as well.